Joining us now to break down the Fed decision is director from crypto brokerage Caleb & Brown, Jake Boyle, along with Morning Consult senior economist Jesse Wheeler. Welcome, guys.
Thanks for having us.
Very excited to get talking. Let's do this thing. So we saw a unanimous decision to raise interest rates by 0.25% from the Fed, and that also emitted prior language that signaled more rate hikes ahead. And so Powell addressed where this statement today could be read as a suggestion that the committee is ready to pause interest rates in June. And let's hear from him real quickly.
Today, our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation at 2% over time, the committee will take into account certain factors. So that's a meaningful change, that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting.
So Jesse, I want to get your response to that.
I think that was the real key takeaway here was the exclusion of that sentence, and shifting towards the explicitly data dependent approach. Powell actually did what all of us have been doing and pointed out that line by line change in the policy statement and his first question there in the meeting. But here the big takeaway is there's no real surprises here. The market was already expecting a 25 basis point hike and a shift to a pause here. So I think we're seeing that in the market reaction as well.
Right. So if there's no surprise, Jake, I want you to explain to me why right when the decision dropped, we saw a God candle and then it immediately retraced and then it just zigzagged everywhere. If we knew this was coming, why is the market acting like this, specifically the Bitcoin market?
Great question. I think Jesse explained it all quite well there, but specific to Bitcoin, we've got to keep in mind, Bitcoin's a 24/7 high-risk asset. It's still in the class of high-risk assets for most investors. And we've also got to understand that trade volumes are actually not very high these days. As a result of that, any people trying to make short-term trades are going to be exposed to dramatic volatility in these small windows of opportunity. Needless to say that it would have been a very difficult period of time as a trader if you look at that chart there. But there's no real narratives that are propelling the cryptocurrency market at this exact moment right now, perhaps apart from meme coins and perhaps liquid staking to an extent. So these large macro events are still going to have numerous traders diving at any opportunity to try and make a gain, try to at least.
Yeah, Jake, is it even possible to trade the Fed meeting, especially this time around?
Personally, our clients are not trading on a short-term basis like this. I can't speak on behalf of every crypto investor. I'd suggest numerous people are trying to make a quick buck here. But we've seen this month and month again. Every time there's a major macro news, there's volatility across all markets. Bitcoin is no different to that. It goes up, it goes down, it goes sideways. And I'm sure for every person who makes a gain, there's numerous people who took a loss there. So not something that I'm looking to touch myself.
Right. So Jesse, you talked a little bit about how the Fed will be driven by data rather than a predetermined decision to raise rates. Why is the Fed doing this? And genuinely, why weren't they already doing this before?
To be fair to Chairman Powell and the policymakers of the Fed, they've been saying that they've been data driven for a long time. As we're all very much aware, it takes a long time, those long and variable lags for the full effect of interest rates to be felt on the economy. But because the economy was still so strong and the metrics they really care about, like wage growth, were still so strong, they didn't really feel that compelled to slow down their shift. And now that we're seeing some softening in the data, it would give them the data that they needed to see to feel comfortable at least shifting towards a pause here.
Right. Okay. So I know this is about monetary policy, but I'm going to ask about fiscal policy because I have the mic here and I can ask whatever questions I want. Jay Powell was asked about the debt ceiling, and he said that it was essential that the debt ceiling be raised. What could, and I want to ask both of you this question, what could this possibly mean for the broader economy, Jesse, and then crypto, Jake? So Jesse, answer that question, then Jake right after.
That's a very tough question. I think the fact that it's so uncertain and the ramifications could be so broad is exactly why Chairman Powell would really prefer to not see that happen. I think it's really uncertain exactly what would happen if the U.S. government defaulted on its debt, potentially throwing a wrench into the largest market, one of the largest markets out there. Let's just hope that people can come together in DC and avoid that outcome.
Sure. Jake, anything to add there?
Yeah, I think I'd add to that in the 3 weeks since the Silicon Valley Bank collapse, we've seen regional banks plummet by more or less around the 10% mark, but we've seen Bitcoin at its current prices up around the 18% mark. It's quite chaotic to say the least, and I'm sure a lot of traditional investors listening wouldn't have thought that regional banks would be outperformed by the price of Bitcoin in that 3-week window to the extent that they have. With that being said, I think anyone who's working in this field or anyone who has their finger on the pulse is fearful. This is uncharted waters to a large extent, and there's numerous people in the largest economy in the world who are going to be affected by all of this. As a result of that, it looks like we're all kind of still sitting on our hands waiting for the next move, but at least markets are being a little bit more predictable in the short term, but we'll see how the rest of it goes.
Yeah, Jake, I'm glad you brought up these regional banks because that also came up during the Fed meeting, part of the Q of A, about this consolidation of banks. And Powell said that it is healthy to have a range of different types of banks, right? Is this banking crisis over? And you say that there isn't really a narrative driving crypto right now, but wouldn't the failure of regional banks be a good narrative for, say, Bitcoin, a way to opt out to know that your money is there?
Absolutely. We also need to look back at the fundamentals of Bitcoin. This is something that was born off the tragedy of the 2007-2008 financial crisis. It's embedded in the foundation of what Bitcoin is. And we're seeing the past repeat itself to a large extent, but worse this time. So with that in mind, the narrative for Bitcoin over the past month, post Silicon Valley Bank, and also largely over the course of the year so far, has been on the basis of people are looking to flock towards a safe haven. Is Bitcoin that safe haven for the long term? Well, that's still anyone's guess. I obviously have my biases, but I also have my conviction. And what we're seeing currently is a narrative towards Bitcoin, but it does appear that the movements today and the announcements today have not been enough to really drive that either way.
Yeah, Jesse, do you think that this banking crisis is over, or have we just seen the beginning of it?
Chairman Powell said, very adamantly in his statement that the banking sector and regional banks in particular are, stable, everything's fine, the backstop worked. However, I would point out that if you look at banking stocks for those, smaller to medium-sized banks, they haven't really recovered since that huge drop we saw in March, which would, certainly raise some questions about, what's going on there. And you talk about the potential flock towards safe haven assets for depositors. A lot of those small depositors who are depositors at those smaller banks are not moving back. They moved over to your JP Morgan Chase or otherwise, or directly towards U.S. Treasuries.
Yeah, so I know we're not supposed to trade right away. We're supposed to wait for the dust to settle. But as the dust is settling, I want you to just tell me what you're looking for the next couple of days. So Jesse, go ahead first, and then Jake, and then we can wrap up.
I'll be watching, continue to watch the market for U.S. Treasuries, both, those nearer term Treasuries and especially the 2-year Treasuries to see, how the market digests this. We've seen this real disconnect between the market's expectations for interest rates and what the Fed's maintaining. So while they've shifted to a pause, they're still maintaining that the Fed will keep interest rates elevated through the end of the year, and the market doesn't really believe that, and hasn't for some time. So it'll be interesting to see, how that gap between the Fed and markets is narrowed and which way that goes.
Yeah, Jake, what about you?
I think to take a different approach on my end, what I'm looking for is more so the consumer relationship between retail investors and Bitcoin. data such as how many Bitcoin wallets have got more than one Bitcoin within them. Some data sets like that, the real simple basic indicators of how much Bitcoin is being adopted is what I'm really looking for. And to me and our company, that will really establish the narrative of, is Bitcoin being seen as a source of a stance to which people can keep wealth as a safe haven, or is it simply being seen as a speculative asset that gets traded just like everything else? So that decoupling event from traditional markets, I think, is going to be something that I'll be looking out for with a keen eye.
Yeah, I think that makes a lot of sense. I'm looking forward to the jobs report to see if there are too many jobs in the economy, and hopefully that doesn't stress out the Fed too much. Anyway, guys, thank you for your time. That was Jake Boyle and Jesse Wheeler.